You are your greatest asset. Your income is your second greatest asset. This one tool, this product that we use to implement infinite banking, is what allows you to protect both you and your income. And I think that we really need to emphasize that part, right? So, infinite banking is a process. The product we use is life insurance, and it
Yes.
allows you to protect you and your income, your two greatest assets. So, most high income earners, especially our professionals and entrepreneurs, postpone life insurance. Why? Well, they feel invincible. They're either unready or a little too busy for life, right? But the truth is, your health, insurability, and your options can disappear in an instant. In this episode, we're going to help you take the first step toward becoming your own banker without pressure and with total clarity. In this episode, we're about shifting you from borrower to becoming a builder. So that way you're no longer at the mercy of risk and you become the architect of your future. Jason, tell us a little bit about what we're going to learn today.
Jeremy, I love how you just jump into things, man. How are you? Good to see you. Everybody out there in the cars listening or wherever you might be, welcome. You're wondering what you're going to learn. So let's jump into it. Why life insurance is an act of leadership, not a reluctant expense. My wife had to put me in an armbar and make me get it. The emotional cost of waiting until later to protect your income and insurability. How convertible term policies secure your future options without forcing a big commitment today. What it really means to lock in insurability while you still have leverage, why your income is your most underprotected asset, and how to fix that. This is my favorite one, Jeremy. How this is a preparation strategy, not a fear strategy, a strategy, not a reaction. Sound familiar, builders? The bridge between today's protection and tomorrow's infinite banking system, whole life insurance, specially engineered for you, is exactly that, a preparation for living your fullest life in all areas: family, finance, fitness, occupation, spiritual, and personal growth. So let's jump into this, Jeremy.
Yeah, so I really like this. A lot of folks think that life insurance is about planning for loss, right? But really, it's about protecting life and the leadership that you're building. So, Jason, when people hear about life insurance, they immediately think, hey, that's something I'll worry about later, or that's just something that wealthy people do. But what's the real cost of putting it off?
That's a beautiful question. And it's such a good frame because what you just said is cost. When people hear life insurance, Jeremy, I know you people on the car can't see me, but I'm rubbing my fingers together going, money, money, money. People think cost. People think cost. They think another bill because why? Because most people are swimming in debt and worry and just barely surviving. So when they hear the term life insurance, especially whole life, they think, man, that's going to cost a lot. But Jeremy, we've both been doing this long enough. We've had enough calls, enough conversations to know that is not at all what this is.
No, no, not at all. The cost of not being insured is really putting your entire legacy at jeopardy, right? I think that the life insurance portion or the product that we use to implement the process of infinite banking, that product gives you a lot of peace of mind, really, when you think about it, right? Because it doesn't just allow you to, pass on an inheritance. It allows you to pass on the true legacy, everything that you've built throughout your lifetime. And life insurance isn't something you wait to get until you need it. In fact, life insurance is something that you have, right? In order that you never have to need it.
Life insurance is something that you build up your opportunity fund because guess what's guaranteed, Jeremy and everyone? Change. Winter is going to come. Now, Jeremy started off, our mission together, the mission of founding fathers, inspire, educate, prepare 10 million fathers and their families to avoid financial slavery, live their legacy, and make a positive impact in the community. I wanted to say the mission, Jeremy, because when you were talking about life insurance, when you were talking about legacy, a lot of people pay, sorry to say this, but lip service to legacy. To I want to create legacy. I want to do this, but they don't really have a roadmap to how. Does that make sense, Jeremy?
Yeah, it absolutely makes sense.
They don't have a roadmap to how. It's like this big foreign thought that's way over there. And if you go back to preparing for winter, building something that's meaningful and manageable, being a builder instead of a borrower, It is the simple paradigm shifts over time that are going to help you actually achieve the thing that you know you want. You're just not sure how you're going to get there. And the conversation today is about timing. It is about those changes we were talking about, some of those changes we might see. And how can you, if you feel like you're not ready yet, what can you do to make sure that you're protecting your family? Because I guarantee you'll do more for those people that you love in your life than you will for yourself, which is a whole nother topic for a whole nother day that we're going to get into with all of you about loving yourself more. But today we're focused on what you're doing to provide, protect, and create for your family, and knowing that you love your family. You love something in your life. If this isn't that conversation for you, you might want to tune out. Just saying. You might not be the person that needs to be listening to this, but this is going to be talking about, like Jeremy keeps telling you, how do you be that builder, protect, and protect through doing a simple strategy and just thinking a little bit differently.
Yeah. So for what a lot of the folks that are out there who still have a hesitation or perhaps still trying to learn more about what infinite banking is, I implore you continue to do the education, tune into our podcast. We have resources on the website, wealthwisebanking.com. But what's also great is you can lock in that insurability today while you continue to learn for tomorrow. So how does that look, right? So
Yes.
there is a cost to insurance. Let's be honest. There is a cost to insurance. There's a greater cost to not being insured. And that's kind of how we started the episode with, right? The cost of not being insured is actually higher. The thing that's guaranteed, which is you will leave this plane of existence, the cost of not preparing for
What?
it is
No,
higher than the actual cost
no,
of insurance.
no, I am not. I am not. Nope. Nope. I'm like what's it called? That show where you got to cut their heads off and there can only be one Duncan McLeod. Immortal. I'm
Highlander. I
immortal.
thought you were going to be talking about Vampire Diaries. I thought that was more your catch. But all right, Highlander. I got you.
No, where that's the decades in between us, my friend. That's the decades. You're watching Vampire Diaries and I'm watching Duncan McLeod of the Clan McLeod. I tried making the family watch that. If you're my age, you know what I'm talking about, possibly. But anyhow, back to you. But the better question, is this expensive when we're talking about insurance, or is it really expansive?
So I want to give that other layer, right? So it is expansive. What we're doing is expansive. But for those who are still trying to learn IBC, but again, you started off with saying change is inevitable, right? Change will happen. Well, we don't know that tomorrow's promised. And that includes your health, that includes your insurability. So, what is one strategy that we use to lock in insurability today to create the opportunity for growth tomorrow? And that's something we call convertible term insurance, all right? It is regular term insurance, so the cost is low. The death benefit is high. It's all the stuff that Daddy Dave talks about, but we use the word convertible because you can actually convert that at periods of time over the term of the policy into an IBC strategy. And I want to give a real world example, Jason, on how I've implemented this for a family, right? If What they did is they have a combined income of about $90,000 a year, okay? Not high income earners. It goes back to that misnomer that this is only for the wealthy. Instead, they were a family that's trying to plan for today. And they have combined income of about $90,000 a year, and they do have one rental property. And they said, hey, Jeremy, we don't want our day-to-day income, our W-2 income, paying for this. We want to mitigate our costs, but we still want to plan for the future. So we sat down, we talked about what's meaningful, what do they want us to do, and what's manageable. So I understood where they were today and where they wanted to go into the future. So what we did is we combined a two-pronged approach. On the wife, we built the foundation of an infinite banking policy, okay? She's about 40 years old. And for those who are worried about costs, for just over $1,200 a month, we insured her for almost $1 million of death benefit. But we also structured it where she had cash value today. So at the end of the first year, she has over $20,000 of liquidity that they can use for emergencies. She wanted to use it for traveling. They have children. Her daughter does volleyball, right? So we established it today for instant liquidity for an emergency savings account and for a couple travel events throughout the year. Over time, we built in enough flexibility that it's going to help supplement the future retirement. Well, Jeremy, you said it was a husband and wife team. What did we do for the husband? The husband is a disabled veteran. And I didn't look at that as a stopping point. I look at that as an opportunity to end up kind of growing their system with them, right? So it was more safety and security. What can we do for the husband today? That's convertible term.
Yeah,
So with
protection. Jeremy's for everyone listening, it's protection. So the first part, the wife, he built a specially engineered policy for her to build a liquidity fund based on their rental income. And that's going to provide protection of $1 million if, God forbid, something happens to her. Now we're moving over to the husband, which we know that there's, when you're in a couple in a relationship, when we're talking about banking a lot, we're not always thinking, how are we both protected in the worst case scenario? So, Jeremy, back to you and what you did for the veteran, for the disabled vet.
Yeah, so his policy is 100% convertible term. And the idea is that using the WISE policy for infinite banking, which means over time, we're going to optimize their cash flow. We're going to free up additional resources, the interest that was going to the bank of Wells Fargo, the bank of, whoever, all that is coming back into their system. So we're increasing their cash flow using the infinite banking policy while still having the liquidity today for emergency savings. That future growth for her is going to allow them to start converting pieces of his policy over. Again, he's got about $1 million death benefit. So we have $1 million of future insurability that we can turn into an infinite banking policy as they expand their system. And what I love about it is I also attach what's called a waiver of premium rider. So if the husband ever gets injured and he's no longer able to pay that policy, the insurance company actually picks it up for him. So it's an extra layer of safety and security, that protection piece that we built in for this family. So over time, they have the next 20 years to be able to start converting that policy where he's effectively just renting the policy now, right? And we're going to start building equity, which is the cash value, into an IBC policy. So that way they can actually get additional future retirement income that's going to offset their future expenses. So this is a two-pronged approach. How are we funding it? Again, they have one rental property. The cash flow from that rental property is funding both layers of protection and growth for this family.
Well, that's a very creative and why it has to be specially engineered for each person. Because you heard they had certain things happening in their life. Jeremy was able to diagnose and actually listen what was most important to him and then offer him a strategy that does everything they want. And they're not working any harder, are they, Jeremy? Do they have to work anymore?
No, we're just using the capital they have today that was going to someone else's banking system. Instead, we're putting it into their control.
Because remember the costs we talked about, right? The reason I asked that question is I can't help the think that people still hear life insurance or hear insurance in general and think expensive. Like I'm working with a couple people that have listened to Daddy Dave for a lot of years. And, he tells me he's buying 1 year renewable term. He's not even doing it for 10 years, and he's paying like $3,000 a year. And I keep saying, sir, that is going to increase every year because you are getting closer to the day that you will graduate. He's like, yes, but over, 10 years or 12 years, that's 36 grand. I'm like, is it? Because every year it's not guaranteed the cost of that renewable term, right? So he's thinking very, very short term. And that's $36,000 that he will put in over 12 years versus doing a convertible term that might cost a little bit more, but it's guaranteed that he can convert it the whole life because at some point that term is going to be, they're not going to keep offering term, Jeremy, after a certain age. Because why? Because term pays out 1 to 2% of the time. You have a 98 to 99% chance to outlive your term. Now, there is places that term might make sense, but for just a little bit more, you're giving yourself a lot more flexibility, guarantees, and opportunities to really set your family up for success because one day you will all graduate. I'm sorry. I love you still, but we're not making out of this one alive, Jeremy.
Yeah, I think it's really important to note, right? The cost of doing nothing is a lot greater than the cost of actually starting this process, right? And you can do it for very little monetary costs to get started. And we can build in the flexibility and security that we have for them. One of the reasons that they had that $20,000 a year early liquidity was they did build up a good emergency savings account. We just redirected a portion of that for the year one lump sum. So from that process, we were able to redirect their emergency savings into an IBC policy that was able to grow and expand with them and their family. And what I also love about it is they're already talking about building this out for their children. So they are generation one, and they're already planning out generation two. Well, the reason that generation two can be so powerful is because the parents are insured. The fact that they have death benefit, they have life insurance, we're now able to build a meaningful, manageable policy for those kids as well.
I'm glad you went there. That was another part that we're going to say. Why else would you use convertible term, right? Because we're talking about the infinite banking process. We're talking about the strategy of really controlling your money, keeping the money in your family, and guaranteeing that tax-free estate, the protection piece. But with convertible term, Jeremy and I were talking about this before we came on today. I said, Jeremy, there's a couple cases where, grandparents are coming to me. I had this question this weekend when I was speaking saying, hey, I want to insure my grandkids. I was like, okay, you can do that. And then there's more questions to that. Okay, how do I do that? Well, does their mom or dad have life insurance? How much life insurance? Because then insuring that kid, depending on what you're wanting to do as a grandparent, is going to determine how much insurance does a parent have to have. Because kids can carry typically up to half of the parent's amount of coverage up to $1 million. Does that make sense, everybody? So, like, if someone had $3 million of life insurance on their body, the kid can carry up to $1 million. If they had 750,000, they could carry up to half of that. So, if the parent's not insured, well, what's a way for the grandparent to still do what they want to do, Jeremy? It's to get a convertible term on the parent. It introduces this being a builder to the parent, and it also gives them time to see what's really being created for their child, right? For the person they probably care about more than themselves, while making sure that they're protected, God forbid, because it's a 2-for-1 coming from that grandparent, right? And then hopefully they're getting introduced to the concepts, to our teaching, to what we're talking about, to Nelson's book. And then over time, because like Nelson said, this is not taught, this is caught. And if you give someone the opportunity of being protected and provided for, that already sets them up better than if they did not have something in place.
Yeah, I think that's what's really good here is we're not talking about buying life insurance, right? We're talking about the living benefits of this with the added layer of protection because of the product that we're using, right? This is a true family banking system. What you're describing is grandparents, parents, and children, generation, one, two, and three. Three generations right there. What I was describing was two generations. I'm also working with a family right now. They're on their third generation. They have five children. On five, I actually submitted the applications today for five children. And here's something crazy. Because they're so young, and we look at the long-term benefits, because we know that this gets better with age, right? That's the power of uninterrupted compounding, which is what you get inside these policies. The youngest child right now is 5. The oldest child is 12. Jason, believe it or not, when I pulled it up and I pulled up the age 65 traditional retirement year, they were putting in $3,600 for that year. The
Hmm.
cash value grew by over $52,000 that year. So they put in
Whoa.
3,600
Yeah.
and got back over 52,000. Now you think about that, every single year, the cost of inflation, the cost of goods is going to keep going up, but so is your IBC policy. That cash value the very next year went up to like 54, 55,000. So they're constantly getting a quote unquote raise in their retirement years, their passive income years, without doing anything more. All they're doing is funding an IBC policy. I mean, that is the power of starting on it young, but you can't start young unless you actually have some sort of protection on you today. And that's
And
where we get convertible term.
and here's another reason. A woman beautifully shared this weekend where you can start the policies. You could start a policy. You could even start a whole life of policy, when the Social Security is delivered, typically around day 15. We're talking about locking in insurability early. We're talking about locking in insurability before there is any kind of diagnoses or anything else that comes up. Because once those things come up, it gets that much harder, if not impossible, to have insurance on the person. So the earlier we start, not only do you have the uninterrupted compounding, but in the case, like the woman was speaking, and I knew it was from experience because you could feel her heart, Jeremy. She was saying, "Oh, before they're diagnosed with being on the spectrum or some other kind of childhood disease at 15 days, their insurable is locked in, and then you can actually use the policy to help cover some of those medical things." So again, is insurance expensive or is it expansive? And Jeremy, your numbers you were just sharing is because when you're thinking long term, You're not thinking about this year, next month, this year, a year from now. You're thinking 10, 15, 20, 30 years. You're talking about these young kids buying their weddings through this or funding their weddings, funding their first home, funding their retirement. Like it literally can be every financial need when you're starting them that early.
Here's a question I ask a lot of business owners, right? If you were to start a business today that was guaranteed to be successful, one that was going to have multiple returns on your income, how big would you want that business to be? What I like about IBC is you are the business, right? And like any business, there is a startup phase. That is the early capitalization period where you put in a dollar, you don't necessarily have a dollar available, the full dollar in the first year. But after 4, 5, 6 years, like we just talked about, that one child, 3,600, you get a return of over 52,000. So 3,600 with a return of 52,000, that is an incredible money printing machine. Well, guess what? You today are also a money printing machine. If you had, let's say that you walked into your garage, Jason, and in your garage, you had a machine that just printed money legally, right? You're not counterfeiting, it just printed legally.
Man, I thought you caught me, Jeremy. I thought I was toast. Now you're sending it to my garage. Come on, man.
Yeah, so you go in there and you got money and you're using it for an emergency savings or an opportunity fund, using it for investments or real estate or growing your business, right? Ask yourself, if you were to leave that machine unguarded, probably not. Would you recklessly use the machine or would you not have maintenance, on this machine? It's literally printing money. You are that machine. If you're the breadwinner for your family, you are the machine that prints money for your family, right? And that machine just represents your IBC policy. That machine, the IBC policy, is the financial engine that builds the capital. It provides the liquidity. It gives you the uninterrupted compound growth.
Jeremy, I loved where you went with that. And I also, it made me a little uncomfortable, but it should make all of you a little uncomfortable too, because there's only two ways money is earned. Human makes money, right? You are that machine, or eventually your money's going to make money. And Jeremy gave both examples, 3,600 coming in, 52,000 available because of uninterrupted compounding interest. Your money's making you money there. And then hopefully by that time, you've learned another skill set and what you know, like, and understand to leverage that. But Jeremy is also giving us really great insight. Why is there life insurance in the first place? There's life insurance because at 40, at 30, whatever quarter of life you're in, your life insurance is meant to provide and protect your family if you, the money machine, can't keep going and doing what you're great at, what you know, like, and understand to make money. You're trading time for money. So it's that replacement of income based on how much money you're making. The younger you are, the bigger your death benefit has to be because you have more years that you have left to work.
Yeah, everyone out here likely insures their car. You likely insure your house. Why are you not insuring yourself? I mean, we talk about homeowners insurance is in case something happens. Car insurance is because in case something happens. But what about you? At some point, you will graduate from this plane of existence and move on.
Do you think people are going to keep listening to us, Jeremy, if we keep telling them they're going to die someday? I mean, except the aliens listening, because I know there's some of them out there. So, I mean, extraterrestrials like ET. But for a second, Jeremy, I know I keep cutting you off, but this is too much fun not to have a little fun with this, with what that replacement, the money printing machine is, the protection piece of this. What I would ask you, every situation that Jeremy just gave you, car insurance, home insurance, fire insurance. By the way, I almost burned down our house yesterday making some chicken and bacon on the grill. We had a 4-alarm fire and I thought I was a goner. I'm lucky to have eyebrows for today. But we lived, but every insurance you have is an if-then strategy. If this happens, then it's replaced. Guess what? Whole life insurance, convertible term to get you to whole life insurance, is a when. This is going to happen, you are protected. There is no if and then. If I get in a car accident, then I pay a deductible, my car gets fixed, right? If I get hurt, then I go to the hospital and I get medical attention and it's covered. This is an inevitable protection piece and strategy that's in place, and it's not like every other insurance. This is much different in my mind, or different.
It is, and I love the convertible term portion of it, right? Because even if you're not ready to start the infinite banking process, we can still lock in your insurability today, meaning you don't ever have to go back through medical underwriting. You could just take that death benefit, we reverse engineer it into a whole life permanent strategy, an IBC strategy. So if you're not ready to start, at least, in the very least, get the convertible term so we can expand your network in the future, because you at least have now the next 20 years of death benefit to protect you, the money printing machine. And over time, we can take 50,000 here, 100,000 there. Take it all the way over into permanent insurance over time. That's called expanding your network.
That is like another example of this. Can I tell one more story about another client? Same thing you're talking about.
Yeah.
So another client, same thing, pretty young, the ability to work more, be more of a machine, but working about 3 days a week as a pharmacist, and then not really wanting to work a whole lot more because they wanted to do other things, not in corporate America. So the other time was built on building up the other thing for the future. But he wanted his wife, himself, and their 2 kids to have that protection if he wasn't around, and his wife as well. So, like you did, we locked them both in for convertible term at $1 million, and they were in their 30s. So theirs was pretty cheap because they were both very healthy. And then his goal was to go free up cash flow by paying off debts using velocity, right? And then coming back when he freed up enough cash flow to convert a significant portion to do the next goal. And so within a few months of executing the convertible term, we started converting his policy. Haven't converted his wife's yet. Her insurability is locked in. Because remember when I said winter and change always will come? They will. So what happens, God forbid, that you are diagnosed with something that makes you uninsurable, that there's an accident where you're uninsurable. Like Jeremy said, tomorrow is not promised.
You are your greatest asset. Your income is your second greatest asset. This one tool, this product that we use to implement infinite banking, is what allows you to protect both you and your income. And I think that we really need to emphasize that part, right? So, infinite banking is a process. The product we use is life insurance, and it
Yes.
allows you to protect you and your income, your two greatest assets.
And Jeremy, let's push on the button, the sore button a little bit more. I want everyone to go a year into the future. I want you to really remember this conversation that you're having with Jeremy and I on this podcast, this moment in time. And let's say you say, yeah, that's something that's on my to-do list, my bucket list. It's something I'm going to take care of. My question is when? Decisions are made in a moment. In a moment. Any big decision you've made in your life, it happens that quickly. So if you're listening to us today and you go a year from now, let's call it 2 years from now, and then you find out that you're diagnosed with, like my sister was, cancer or something else that makes you insurable. And now your future is really uncertain. You don't know how you're going to keep working because you need your energy to be able to just survive. Because once you lose your health, you got one focus, your health. And now you're just trying to survive. And now as a provider, if you're the husband, you're trying to figure out how am I going to keep my kids going to their school, doing all the things that they're doing? How do I keep providing for them, all the extracurriculars? If you didn't make that move to protect the money printing machine, how are you going to feel about that when you really need it?
Jason, I can hear the emotion and the weight in your voice as you talk about your personal family and how this hits home, right? And I understand in talking with you just off the podcast the importance of that protection piece and providing for your family. And hearing that weight in your voice, to me, it just really hits home as I hear it. And I hope the other listeners kind of pause and reflect and say and think for a moment, if the inevitable happened to me, how would that affect those that I care about? That's what you're really getting to, right? Is it not? And
Yes,
as a builder,
100%. I want you to think, where are you at the lowest point in your life when something changes that's drastic? You want to know that you've done everything in your power when you're healthy, when you're able to take care of those that you love. If you're not able to be around to take care of them, make sure. I mean, we lost a really dear friend that was much, much, it's like your age, Jeremy, maybe a little older. He would get my reference to the Clan McLeod, but way, way younger than I am, at least a decade younger than I am, and healthy, cool guy, not, didn't seem like he had any health problems, gone, left 3 kids, a wife. Thank God he had life insurance and she was able to have almost 24 months to get back on her feet before she was really ready to put herself back out there and go back into the workforce and really start like creating her new future because we watched her go through so much pain and everything. But thank God that he at least had that piece of insurance for his family.
Builders aren't waiting for the perfect moment, are they, Jason? Like you're always
Never.
for tomorrow, for the next day. And we're taking care of those people and the things that we care about most today. There is no perfect moment. It's just not going to happen, right? Life always gets in the way. And if you're putting this off and waiting until you're wealthy, or you're waiting until the perfect moment, or you're waiting until something else, again, tomorrow's never promised, right? We're creating the conditions today for growth and security, and that we're doing it with clarity and we're doing it with courage, because these are hard conversations that we're having. We started off this podcast, in the first couple episodes, we said we're going to talk about the hard things.
Mm.
This is one of the hard things that we're going to talk about is what happens to you in case something happens. Now, as we kind of bring it full circle, if you're not ready to implement infinite banking, at least get convertible term, lock in the insurability, have the understanding that we can build this, reverse engineer it in the future for infinite banking, but at least lock in the convertible term today at a lower cost. And we'll build it over the next 20 years whenever it's meaningful and manageable for you on your terms. Because again, you are the leader of your family. So take charge. When in doubt, take charge.
That's it. Leaders lead with courage. They go forward. They put the hand back to extend and help those behind them. If you're the leader, if you are the one that needs this protection, and remember, all convertible terms not equal either, Jeremy. Like you want to work with someone that is an IBC certified infinite banking practitioner, if that is your long play to think long range portion, because not all terms are going to be convertible, even if it's a convertible term into what we're talking about. That doesn't always work that way. So make sure you're having a conversation with one of us. So Jeremy, like you said, to bring it full circle, to wrap it up, put a pretty little bow on top of it. Ready to stop putting this off? Schedule your free strategy call at wealthwisebanking.com and take the first step towards being the builder your family needs. Don't miss our next episode with Jared Adams, where he shares why acting early in IBC wasn't just a good move, it was a lifeline his family needed. Know someone who's too busy to protect what matters most? Send them this episode. It may be the moment, you may be that blessing that they have been waiting for and they didn't even know it. So, Jeremy, I'm going to do the front end of this. You're already in banking.
I'm just not the banker yet.
Wow, we pulled that off, Jeremy. We reversed it. We still did it, just like Missy Elliott. We'll see all you all in the next one. Be blessed.
Take care.
Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.